In the wake of the Federal Reserve's bold decision to cut interest rates by 50 basis points, China has initiated its own round of quantitative easing aimed at revitalizing the real estate and stock markets. The PBOC is not only lowering rates but is also providing targeted monetary support, releasing over 1.5 trillion yuan in liquidity. Notably, PBOC Governor Pan Gongsheng stated that the central bank is exploring measures to establish a stabilization fund for the Chinese stock market. These developments sparked a rally in Chinese A shares, which surged over 4% on the announcement, signaling a strong recovery in market sentiment after years of stagnation. Many investors are now proclaiming that a bull market has arrived. However, contrasting with China's long-depressed market, the sustained growth of the U.S. stock market raises concerns of a potential bubble. Ed Yardeni, president of investment consultancy Yardeni Research, noted that the Fed's recent rate cut could propel U.S. stocks to new highs, increasing the probability of a total collapse in stock prices from 20% to 30%, reminiscent of the internet bubble when the S&P 500 soared 220% from 1995 to the end of the millennium. On September 24, Beijing time, Governor Pan announced a 50 basis point cut in China's bank reserve requirement ratio, releasing approximately 1 trillion yuan in liquidity, with potential further reductions of 25 to 50 basis points later this year. The near collapse of the real estate market is a primary driver of China's economic malaise, prompting the central bank to lower existing mortgage rates by 50 basis points to ease repayment pressures on households, which could reduce annual mortgage interest payments by around 150 billion yuan. Additionally, the minimum down payment for first and second homes will be standardized at 15%. Following these measures, the PBOC will utilize REL lending tools to provide liquidity support to policy banks and commercial banks for the acquisition of existing land from real estate firms. Governor Pan also announced a reduction in the central bank's policy rate, lowering the 7-day reverse repo rate by 0.2 percentage points from 1.7% to 1.5%. Crucially, the PBOC is also introducing structural monetary policy tools to support the stock market, with an initial phase of 500 billion yuan, and plans for an additional 1 trillion yuan if the initial measures prove effective. Furthermore, Governor Pan indicated that the central bank is examining specific measures for a stabilization fund to enter the capital markets. These announcements led to a dramatic surge in the Chinese stock market, with the Shanghai Composite Index closing up 4.15%, reclaiming the 2,800-point mark, while the Shenzhen component rose 4.36% and the Chinext Index climbed 5.54%. The combined trading volume in Shanghai and Shenzhen reached 971.3 billion yuan, up 420.3 billion yuan from the previous day, with a net capital inflow exceeding 30.1 billion yuan. Overall, 5,167 stocks rose while only 161 fell, with 98 hitting the daily limit up and 7 hitting the limit down.